Guys, it's good to see you. Happy Friday.
Thank you.
Jason, I wonder, I mean, we're going to talk some individual names like Snap, but are rates once again rising in your universe of metrics that will drive your coverage?
Yeah, I mean, Snap is interesting because it's only trading at a slight premium to the peers, yet it is probably the fastest growing digital media company right now and actually has potential to meaningfully get bigger if they can execute on their initiatives and fend off TikTok.
But my question was, we were just talking about macro and the Fed and rates. To what degree is that overpowering micro corporate fundamentals?
Yeah, I mean, I think there's definitely concern on the fundamentals, particularly starting in Europe, and do we get spillover here? So I think a lot of the Fed has been priced into a lot of the tech names, and really it's the update from the companies and you know how weak the outlook is that's driving the stocks. And so Snap told you last night that the business rebounded after the Ukraine war, but they still were taking a more conservative outlook because of the messages they were hearing from advertisers.
Yeah, I mean, Stephen, I'll put the same question to you. I realize it's been an incredible week, just in terms of some of the moves we've seen around the streamers, starting with Netflix and then going through to the other media names that you do cover. But how much are rising rates and the macro environment, inflationary pressures, which were raised around the Netflix results as well, factoring in here?
Certainly, we see it showing up in the way different stocks react to these catalysts. You know, Netflix is certainly a good example of a growth stock that I cover. There's a lot more story. There's a lot of long-term potential. And when that long-term is suddenly seen to be at risk in a rising rate environment where risk is suddenly a lot more expensive, you know, you see the reaction like we saw earlier this week, which is violent. We cover some stocks that are also much more in the value camp. They have a lot of free cash flow. They don't have that sort of long-term narrative to them. And those are the stocks that are certainly working a lot better year to date. These are stocks like Fox or some of the TV broadcasters that we cover, because there's just a lot less to change in the story. So it's more about the earnings.
So then would you be telling investors, Stephen, to be steering clear of some of the streamers and focusing more on those value plays?
Yeah, we would. We published a note on this last month, actually saying exactly that tactically in this rising rate environment, we feel a lot more comfortable in really well understood businesses where the business itself isn't changing. We also think that inflation is going to be good for a lot of the advertising companies in the advertising market. You saw that in a name like Omnicom earlier this week. So yes, we're certainly taking a little more of a value-centric approach here.
Yeah, and so Jason, just to bring it back to Snap specifically, given the fact that it is trading higher this morning and kind of bucking the broader market trend, despite results that maybe weren't that great. I mean, I realize the daily average users got a lot of attention here. I mean, TikTok seems to be the boogeyman. It sort of came up around Netflix earlier in the week. We've seen it come up over and over again where Meta is concerned. Is Snap able to counter TikTok in a way that some of these other platforms aren't?
It's still early, and if you look at some of the estimates that are in the public domain for TikTok, I mean, people are forecasting that they're going to have a business that could be as big as twice as big as Snapchat this year, potentially outside China. So you can't you can't dismiss TikTok is growing incredibly fast. The question is, where's the money coming from? Is it coming from paid social budgets? Is it coming, Facebook? Is it coming from Snap? Is it coming from YouTube? Is it coming from linear TV, right? Given how bad, and Stephen commented on this, but given how bad, linear TV ratings are down. So you can't counter that. I think all Snap can do is show, look, our daily active users aren't slowing down much. And they're basically telling you that the business is still growing quite healthy, and they're still really early in their initiatives around augmented reality and maps.
Shepard Smith here. Thanks for watching CNBC on YouTube.